So welcome to the Future of the Money Summit 2022. Today we have seasoned entrepreneurs and executives joining us from the blockchain space. And we are here to discuss how blockchain is revolutionizing the finance service industry. Our first panelist is Kaavya Prasad, who is the co-founder of Lumos Labs. She is also an early stage Web3 investor and an evangelist of the space. Next, we have Tarusha Mittal, who is the COO and co-founder of Unifarm. Tarusha is a seasoned blockchain entrepreneur who has co-founded multiple tech-focused ventures. Next, we have Pranav Sharma, the founding partner at WoodStock Fund, which is focused on investment in distributed ledger technology. Pranav comes with over 15 years of experience working in both traditional and decentralized technologies. And finally, we have Adrian Jonklaas, CFO and COO, as well as the head of research at Covalent. He has over a decade experience across multiple ventures, including starting a regulated security token platform in 2017. Thank you everyone for joining us. So let's dive straight in. I'd like to begin with the potential of blockchain technology. We know it is the foundation of cryptocurrencies, but countries and banks across the world have had a mixed perception of crypto. But they have started accepting and acknowledging blockchain technology as an area of untapped potential. What are the kinds of scalable use cases we could see emerging in the next few years in the financial sector and beyond? Maybe Pranav, we could start with you and the others can chime in.
So, first of all, thank you very much for this amazing opportunity. Great panel here, and especially with women, being there, it just represents what Web3 has as a potential. It is just a great space for inclusion and expression on a massive scale. So I just want to start by making that point that this is a layer of technology which is very different from the other emerging technologies, and has the ability to A, permeate, and B, bring expression inclusion on a massive scale. And from that point of view, what I mean by expression is that you see NFTs, metaverse, games, etc. These are phenomenal spaces for expression. And so in many ways, we are stepping into marketing 2.0, consumer tech 2.0, whatever you call it, which is more borderless and a lot more, you can say, wherein you can express and you can also monetize and have your own data, etc. So this is one space. The second space is a lot more about inclusion. Inclusion is about let's say finance, when let's say there are a lot of have-nots. Still in India also, there are a lot of people who are unbanked in many ways, and phenomenal work done by the government in terms of building the right kind of policy structure and creating spaces for, the last mile benefit. But how do you ensure that the assets, stay within the hands of the end user and they get judiciously, deployed as per their own will? And how they can find innovative pathways to participate not only in the agreed, or let's say the popular streams of engagement, but also sort of international spaces, international applications systematically. So in many ways, from that inclusion perspective, as an inclusion of having your own assets, and B, in terms of having the wide variety of applications that you can access, all of this is enabled by Web3. So I'm just sort of opening up this canvas by saying that when people look at cryptocurrencies and they label this as Web3, or they label this as blockchain, then they're making a huge mistake because they are missing this fundamental point. This is about inclusion expression on a massive scale. So the possibilities from application standpoint are galore.
Right. Tarusha, do you want to share your point on some of the scalable use cases you see emerging in the next few years?
Oh, absolutely. And again, thank you so much for having me on this panel. It's really lovely to see all these familiar faces. But regarding use cases, as Pranav made a very good point that which kind of alludes to the industry conversation that we have had at BACC as well, that, usually Web3 is being equated with crypto, at least in the narrative that we have in India, which is perhaps not very good for the ecosystem. It's a little detrimental to the narrative that we are trying to create, which is a little beyond speculation, a little beyond exchanges. We're looking at real use cases. So, you know, the kind of use cases that I see emerging, as Pranav had mentioned as well, that there are, you know, NFT use cases, there is the metaverse, and there is also the DeFi space. So, you know, with DeFi, I see it progressing and creating like, you know, a parallel financial system, which is more inclusive in nature, which kind of gives the people who are, you know, as a prerequisite, they are kind of, because of prerequisites, they kind of stand rejected from the traditional financial world. They can find space in the DeFi space, you know, the kind of financial system that we are creating with DeFi. In terms of, you know, NFTs, I see decentralized IDs and, you know, gaming, you know, a lot of use cases in the gaming space as well, vis-a-vis NFTs. Same is the case with Metaverse. Metaverse, I think, has already kind of made a mark. There are so many blue chip companies that have actually, you know, started investing and looking interestingly at the Metaverse, and they're advertising and they are looking at components to sell online in the Metaverse. So I think these are some use cases that are, you know, it's a dynamic space. It's constantly moving and evolving forward. It's very hard for me to say where will we land, but the outlook looks really good, because now as an industry, we are looking beyond crypto and we are looking beyond exchanges. We are actually looking at use cases, and solid platforms have come up that are actually trying to solve a real problem.
Right. Kaavya, what do you think?
So first of all, thanks for having me on the panel as well. And I couldn't put it better than what Pranav and Tarusha just said, right? The kind of use cases that you can think of with blockchain technology are immense. But as you know, as your question stated, which was, you know, predominantly in the financial sector, I would say blockchain mainly in the financial sector allows for transfer of currency with the confidence that it's secure, reliable, and transparent, right? So with that in mind, for the financial sector, there are some that are already being implemented in the government. There are talks of, you know, actually launching a CBDC in the coming year, even by the government of India itself, right? So these are a couple of use cases of blockchain technology that are being seen. But that apart, I'm going to be excited to see more blockchain use cases within the government itself, right? Like government expenses that are probably transparent, where we can see where the funds of the government are being used in, say, development of the cities, where there would be probably more transparency within the citizens and the government, where we know that the funds are being used in the right areas and for the right development, right? Political funds as well. The inflow and outflow of funds would help the you know, citizens of a country be able to vote for the right sort of party. These sort of use cases help with the underlying technology, which is blockchain, where we have transparency and we can actually see this on the ledger, right? That apart, there are, you know, the usual use cases like lending platforms, credit scores that we can probably, you know, have, which could be universal, interoperable, and be used across the globe rather than just region specific. And I think one of the most important things, and I've faced this problem, and I think most of us have faced this, is cross-border payments. So when I go to a different country, I'm paying, you know, incredible exchange rates and transaction rates, which could be, you know, subsidized to a certain extent with the use of blockchain. But that apart, I think Pranav and Tarusha have already mentioned about metaverses, NFTs, so I'm not going to repeat that again.
You know, so zooming in a bit, Adrian, into the main theme of the panel, which is the financial service industry and the potential blockchain technology presents. So we have seen, you know, banks being at the forefront of adoption and experimenting with what this can potentially do. There is Axis Bank working with Ripple, then ICICI and Yes Bank have joined hand with a project launched by JP Morgan. So what specifically do you think that this technology can do in the traditional financial services industry? And, you know, if you can contextualize it in the sense that, especially in India, what opportunity can it present?
Sure. Thank you for the question, and thank you for inviting me to this panel. It truly is a pleasure to be here joining you from Vancouver, Canada. Of course, I will try to give you some Indian context. I have spent many years in India, and it's a country I'm very familiar with too. So, yeah. So, I think I'll answer this question expanding a little on what Kaavya touched on too, right? So, blockchain, one of the early use cases for it was payments, right? And whether it was cross-border or just inside a country for that matter. And I think that's an area where we've seen remarkable traction, right? So like if you just look at stable coins, which was an innovation which just took place over the last few years. So there's a stable coin called USDC, for example, which grew from about $1 billion 2 years ago to $45 billion today, right? So that's like incredible growth there. And that's a stable coin that I use personally to pay our overseas team, right? So that's a cross-border payment use case that like I actually use inside our organization, right? So, and I think we'll see that more and more as banks adopt blockchains for things like interbank settlements, like so that's it's slightly different form of payment. It's doing it at a mass scale, right, between the banks, right, when they're settling things, whether it's on short-term credit markets or foreign currency exchange or whatever. Banks have to constantly settle these, and like the traditional rails for these, like it can be done in a few hours, but sometimes in cross-border situation, it can even take a few days for settlement of these transactions to take place. But on a digital ledger, it can actually take place in a matter of seconds, right? So I think that's a great speed in finance is always it frees up capital for more things, which is always good. So I think. I hope that answers the question.
Yeah, no, you made some great points. Would others also like to share how specifically in the financial service industry in India we could see blockchain being adopted more and more in the future?
So Apoorva, if I can, let's just step in. So my own background is, let's say, about 10, 12 years in financial services in India.
Right.
I've been across the spectrum. I've been in asset management side, broking and distribution, insurance side, and also structured finance. So my experience if you look at it from a 30,000 feet view in financial services, my experience has been that horizontally it's broken. So what I mean by that is that, at least for example, I don't see the necessity of, let's say, cross-sell department, right? Or some strategic function, whatever name you can call it, which basically synergizes between different businesses or different verticals. And wherever there are no regulatory boundaries, those you can say those collaborative efforts should be very normal, because there are ways and means, and they basically benefit the stakeholders, the shareholders, and of course the customers, etc. So there's a horizontal, you can say, transparency and trustless network which can be built using blockchain as a technology fundamentally.
Right.
B is, if you look at it vertically, then most of the board meetings and conversations I was part of, and I'm not making a comment on any specific institution here, please understand, this is a nature of any centralized organization, is that when you have multiple hierarchies, customer is not in sight, typically. So rarely, I think Amazon or one of those companies used to have, let's say, one seat in a boardroom reserved for the customer. It used to be always empty, etc. But I would say both in terms of reality and mindset, usually the customer centricity is missing. So how do you sort of disintermediate? And the power of this technology, it also disintermediates in a way that you create that direct touch with the customer or with the participant. If it's a B2B play, it is with the participant who is going to be interfacing with the customer. If it is a B2C play, then you are interfacing with the customer. So financial services, as the name says, it is about service. Yeah. Whom are you serving? So essentially you're serving customers, right? So I think this vertical disruption, wherein the customer becomes the single point, as a single node around which the entire business is centered around, is the future. And it can't be done by actually building hierarchies of organization. It can only be done by building an amalgamation of various technology, wherein something like a blockchain, which is like a decentralized ledger, wherein you can build these trustless, fungible, and extremely transparent, systems, being the bedrock around which you can have other technologies like AI, ML, layered up, so that you can build that, customer direct, connect, engagement, etc. Right. So this is at 30,000 feet. Now, if you look at it, from a 5,000 feet perspective, that means the whole lending as a space, becomes a lot more customer centric, right? So can, let's say, the real world assets, as well as, you can say the social, imprints of users be utilized without compromising on their data and their personal privacy? And can the right kind of credit decisions be taken? So this is like from a lending perspective, just as a case in point. Can wholesale lending, credit scoring be shared across various institutions? So this is from a B2B perspective. If you look at insurance, can the insurance become a lot more individual centric? Can you create systems in which the individuals who are just data points in case of insurance industry become more participative in terms of creating the products of tomorrow, even if they work in a smaller group of customers? But still, from a premium perspective, the premium is priced in a way that the customers pay for the insurance that they seek, rather than getting a product that is being manufactured centrally to cater to a very broad audience, and it does not serve anyone broadly. If you look at structured finance, can you build products which are once again available literally on the go? Extremely flexible technology, right? So here you can, let's say, build products which are serving for a specific needs, specific market conditions, and we already see certain platforms emerging around this. Like, for example, let's say if you, I'm just saying example, let's say if you have a Mudrex, right, or StockGrow, they offer, by giving more modular and you can say customized product vis-a-vis traditional broking businesses, which are essentially pass on the risk directly to the consumer, systemically, if I put it this way. So I think if, let's say, we go on looking at this from a first principles perspective, both horizontally and vertically, we'll see a plethora of applications. So I'll just sort of go with Adrian, and what even Kaavya mentioned there is that the whole financial services system, and for the purpose it exists to basically serve the customer, can potentially be disrupted by these bundle of technologies over a span of time.
Right. To sort of replace, but make what's there better and more customer centric and transparent. Tarusha or Kaavya, would you like to share your thoughts on this?
So I jump in here, but I think, Pranav made a very great point that the technology that we're dealing with in terms of blockchain can really make or disrupt this financial sector and make it more customer centric. So that can be, because it becomes customer centric, the kind of use cases that it would have, not just in vis-a-vis lending or vis-a-vis keeping, say, like a CBDC, they all change. And obviously with blockchain, the kind of transparency that comes in and the kind of security that comes in, we hear of how, just to take an example, like how Aadhaar, those identities, they keep getting leaked, and there are databases available. Like all of those details are available online for a few bucks. We've seen something similar happen in China as well recently. So, that is where the disruption is coming in, that we are decentralizing, information in such a way that it cannot really be hacked, that, that one point of failure that gets removed. So that obviously has massive implications even in the financial space. Even if we are looking at identity, we are looking at CBDC, whatever we might be looking at, there are so many use cases that require change in this space. And, what Pranav said kind of earlier, that this is all about making the existing system better. So, when I said that, DeFi is going to give people who are, as a prerequisite, they are being rejected from the traditional financial system. That obviously that is also about giving the user an opportunity to at least be a part of some sort of a financial system, which is kind of as a prerequisite rejecting that particular user. So it is about creating those opportunities for users to make it more user-centric, where, be it something as simple as perhaps storing or saving your hard-earned money somewhere, whether it is lending, borrowing, insurance protocols, ID-related things, whether it is keeping like a civil score or like a social score or a social security detail. All of these things come down to the user, and blockchain, the main way that it will disrupt are basically, the way I see it, there are two. A, it's decentralized. B, we are kind of ensuring that there is some amount of transparency and security that comes in with this added layer.
Right. And I think we are still a bit far away from these applications and use cases being adopted at, massive scale or being too mainstream. I just want to bring in this important point of regulation. So a lot of countries around the world are deliberating and figuring out how to regulate blockchain technologies and the various use cases it's presenting. What are your thoughts on the regulatory and the operating environment that the industry currently needs to really flourish? If Kaavya, if you would like to start.
Sure. In terms of blockchain technology itself, right? The governments I've seen so far, including the government of India, has been very pro the technology, right? The concern in terms of regulation always comes down to when cryptocurrencies are involved, and especially when cryptocurrencies meet the real world currency, which is fiat currency. So that is where the regulatory uncertainties kind of come into the picture. But to answer your question, right, when it comes to blockchain technology, I don't think there are any regulations that the government is looking out for, other than policy making, setting up sandboxes, and actually figuring out the use case of blockchain technology in any sort of problem statement that they have. Right, there's supply chain solutions where blockchain technology is being used for transparency to see how certain product reaches from A to B, from the source to the end result or end area, right? So basically, when it comes down to blockchain technology, I think there are no regulations that we are looking at this point in time. It's mostly about adding more blockchain technology initiatives, like running accelerator programs, maybe doing more hackathons that would get more people building with this technology, and running government-aided sandboxes to look at, having more interesting, innovative solutions using this underlying tech. But when it comes to cryptocurrencies, that's where the regulations are kind of coming into the picture. And I think the Indian government is sort of going in the right direction in terms of regulating cryptocurrencies. And if there is regulation, that means, there is a future for this. And there are some, conversations within the government that are happening about, probably getting this going in the right direction in terms of taxation, in terms of companies sort of launching their own tokens, etc. But the technology itself, I think, is a free for all, and it's community driven, and anyone can essentially use it for the betterment of the world itself.
Well, that's true, absolutely. But there's still hesitation, I guess, amongst the entrepreneurs to, like a large number of entrepreneurs to come in and build in the space because of, whatever reasons. If Tarusha or Pranav, if you guys would like to share your thoughts on the regulatory and the operating environment that would really bring a lot of, amazing entrepreneurs in the space and fuel this economy further.
Sure. So, I can step in here. Like my perspective on the entire policy, table tennis game that keeps going on is that it is just that. It is very iterative. Policy is always going to be iterative. The process is going to be a little painful for the stakeholders because, you have to keep making representations, keep making the government understand, that it is not just a Ponzi scheme. It is, to keep out the bad elements. Like, see, I understand the government's point of view that, they are trying to regulate for the masses, right? We as a industry get into our own echo chambers and we feel that, okay, we are building and everybody understands. But the truth is that, a fraction of that mass population understands what's happening in Web3. So the government has to, create policy for everybody. Having said that, and this is not a very popular opinion, I do not believe that the government should coddle the, end user, because ultimately Web3 is all about decentralizing and giving more onus to the user, like end user to have more responsibility, to feel, to do what they want with their money, or, and be a little more responsible. So That having said that, I think there is a fine balance that needs to be tread here, and policy would be iterative. And as I mentioned earlier, it will be a painful process while it is taking shape. But to your other question, that how do you kind of encourage other entrepreneurs to build in this space? Very honestly, I think entrepreneurs are going to build. They'll find another jurisdiction to go to, and they will build. So what bad policy or this iterative process basically does is that it drives out people to other jurisdictions where they feel they'll be more comfortable building. I don't think that something like policy really stops entrepreneurs. Like true-blooded entrepreneurs, they'll build, right? Because they're interested in building. They're not, that is like something that doesn't even strike them, I think, like the compliance issue. Now that, with Web3, it's like, it's a mainstream conversation. But otherwise, like, if you talk to folks who are in the deep tech space and they are building, they are not thinking compliance. They're just thinking about their own product. That compliance actually, comes in when they go in and try to raise money, right? And then, somebody more experienced than them will tell them that, what you're doing requires some kind of regulatory approval. So that is like step 2. So, I really think that builders just find, shores where they will find it more conducive to build. I would really like India to get on this bandwagon and not be left behind like we did with, with microchips and with the internet itself, that we became like a back office. I really don't think that, I don't think that we should do that kind of disservice to the kind of really great minds that we have here, Indian entrepreneurs that are building for the world. But builders are going to build.
Adrian, if you can give us a perspective outside of India, what kind of regulatory and operating environment is sort of necessary for this economy to go to the next level?
Yeah, so I think I'm more on Tarusha's side here in that, like, I think there needs to be balance here between, regulation and protecting the end user, the retail user, the consumer, but also allowing scope for innovation, and also just maintaining this foundational principle behind blockchain and cryptocurrencies called decentralization, right? And a lot of that was about like taking back control from governments or people who had a lot of power, right, to potentially control our lives in different ways. So, that's kind of how all this movement started, many years ago through this cypherpunk. So that so there's still a tension there. But certainly, like in Canada, like I was a founder of a regulated security token platform. So I think, as Kaavya said, like one approach to regulation is a sandbox environment, which is very helpful. So where the government can provide some guardrails, but also can give scope to entrepreneurs and organizations to innovate with some light regulation, let's say, right, or some leeway on certain exemptions on certain things, right? So that was very helpful in Canada. The regulators there, which are provincial, they take that approach when it comes to blockchain generally. So I think that that could be a very successful in India too. Also, I just like to provide a bit more perspective again. Like, so I think we're potentially in a cycle of erring on the side of over-regulation. Regulation always lags behind, and part of it is driven by news cycles too. So there's been a lot of attention on crypto. But in the scheme of things, it's still a relatively small sector, right? So, global equity markets may be $100 trillion, right? Global market cap for all cryptocurrencies is $1 trillion, like 1% of that, right? So like, so does it really need to be heavily regulated? Arguably not yet, right? It's still not at that scale. We have not got to the scale of mass adoption. What is adoption of cryptocurrency across the world? Has it even crossed 15%? If it hasn't, it's not crossed the chasm, right? So we're not, I don't think we're quite at that ready, at that stage of like the need for the regulator to get too involved. Anyway, that's my perspective.
Thank you. Pranav, what do you think? You work with entrepreneurs very closely.
So Apoorva, so I'm just sort of in a way summarizing what
Sure.
was shared earlier, is that there are three things that worry regulators. One is money laundering, because these are very fungible technologies. Second is taxation. Essentially, if somebody is sort of I would say, in my opinion, this is just my opinion, is that somebody who is a citizen of a country and enjoys the public good should be paying taxes. So if there are tax leakages, it's definitely worrisome. Third is systemic risk that Adrian spoke in detail about. That how something like this, which is so fungible, can actually have a certain overrun on your fund base currency or the legal tender which is there in the country, or could actually some sort of cause a capital account convertibility issue, especially for the currencies like Indian currency, for example, which is sort of there's a capital account convertibility, and we sort of manage certain balances of dollars, etc., and so forth. Now the thing is, money laundering. Definitely, we are getting to a point wherein FATF guidelines have put things into perspective, and this is a non-negotiable. Whether you're a protocol, a decentralized protocol, or whether you are a centralized entity, FATF guidelines are pervasive. I think we have crossed that bridge, so that's not a concern anymore. If there are concerns, the law of the land actually steps in and definitely sort of takes care of it. The second part is taxation. Even in India, also the recent taxation framework came in. There may be opinions about whether it is draconian, whether it is liberal, etc., whatever it is. But the point is, there is a taxation framework. It is great to have a taxation framework. That means that from here it can only become better and more inclusive. Third point is systemic risk. Now, systemic risk is a very interesting topic. Some people look at systemic risk as, hey, this is like 100%, let's say $100 or let's say 100 rupees is the total economy. This is, let's say 1%, 2%. But that is not the point. The point is how many people are participating and do they understand the risk? And if they understand the risk, if something goes south, then who's going to be protecting their interest? Where should they be knocking their doors? So this is where a regulatory framework is very important to ensure that the right kind of legal and ombudsman kind of an oversight is available. And my general shout out to the builders here would be that self-governance is extremely important. Any industry which is matured, whether it is broking industry, mutual fund industry, telecom industry, etc., everything started with self-regulation. So as in, let's say if you are building a protocol, how you can focus a lot more on checks and balances in your own system, have the right kind of treasury management. For example, Adrian does a great job at, let's say, Covalent, right? But the thing is that how many protocols have a CFO who is capable enough to understand what is treasury management, what is the risk we should be taking, what is overrun on, what potential scenarios can cause an overrun? How do you ensure that cross-border payments happen with absolute checks and balances from understanding the local taxation, the regulatory aspects of it, right? And this kind of self-governance and maturity will eventually take this space forward. So as this market correction has happened, fundamentally the technology stands strong. But what will get fixed is the governance and this whole oversight that happened on the legal frameworks, on understanding the financial health of a company, of a protocol, of the ecosystem, etc. So as a lot of prudence comes in, when we emerge out of this bear market, we'll emerge very strong. So all I can say from a builder's perspective is that, as Tarusha was mentioning, that builders will keep building. So find those innovative pathways that you keep on building, and just, don't let your shoulders droop right now. It may be building in India, outside, whatever it is. In any case, these are global plays. So, that, doesn't really matter in the interim. And I'm sure, all of us, we love India in any case. So, so the point is that eventually the good part of all of this, the public good that will be created out of these protocols and the employment, etc., will come back to the country.
So kind of just double clicking on what you said and the conversation around risks this entire industry presents. It's very hard to ignore what's going on right now in the market with multiple crypto lenders failing one after another. Also, there have been several reports that sort of encapsulate the scams that have happened in the DeFi space. So if all of you can sort of share, one side we're talking about how it's too early to regulate, but what can be done that this is scaled, like DeFi is scaled, can be scaled for mass adoption without compromising on security.
So Apoorva, if I may just add to this very quickly, is that we must regulate. Regulations must come. Because right now this has become an echo chamber. I don't know, maybe Kaavya mentioned about this, or but the thing is, if we land up becoming an echo chamber, that means we're only catering to 2 to 3% of the total population. Maybe let's say somebody is mentioning there are like 200 million odd participants, wallets, etc. We are 7 billion of us, globally. So how do we broad base this? Broad basing means that you require regulation as in a conducive regulatory environment. And as Adrian was mentioning, not a restrictive, or as Tarusha mentioned, not a restrictive regulatory environment. Now, the challenge here is that how do you create a conducive, progressive regulatory environment? And as you're mentioning, the data points right now are what happened with 3AC, Celsius, Terra, etc. And definitely creates a situation wherein, let's say, it sort of puts regulators on a backseat and they observe whether this is creating a systemic risk. If this is left, completely open, then can it create challenges? So I just want to share here that, a few things which regulators can probably set up, I would say step up and notice here is that a lot of these entities that failed were centralized entities. These kind of entities have failed in 2008, in 1997, in Great Depression, etc., etc. There are enough and more data points there. So just focus on that centralization is the problem. Point number one. Point number two, the thing is we can't dismiss globalization. We are an interconnected world. So if, let's say, something happens in auto loan segment in US, and let's say there is a crisis that happens in the central banking system, which is, by the way, happening in US right now, just to share a perspective there, it will have a contagion effect in all the banking system globally, right? So you can't isolate, something. So what has happened right now in blockchain space is a contagion. And it is important to observe this and see that centralized entities are a point of failure, and see that how you can promote a lot more decentralization, create superior governance, encourage builders to build superior solutions which can interface with users and give them the right kind of, you can say, disclosure, so that they can participate very meaningfully and scale these systems and be a global citizen of these emerging networks.
No, I understand your point, but I guess centralized entities bring mass adoption. And, there's this whole Web 2.5 thesis going around in the VC world, which is simplifying and making the UI UX more, like we're used to. So, I mean, in that context, what can the centralized or decentralized entities do to scale but not compromise on security? If others would also like to share their points. Kaavya, Adrian.
Sure. So one main thing with DeFi protocols, I would say in particular, is a lack of transparency that I'm seeing. And, I'm a DeFi user as well. And a lot of things aren't being said when they're supposed to be told, right? And that is something that I think comes because of centralization that Pranav just mentioned, where, the organization decides not to share certain vulnerabilities that it might have in terms of security. So some things that they could probably look at is, DeFi monitoring tools where we could actually be able to assess certain things before actually making a financial decision to invest in something, right? Putting out security transparency where developers can basically build and help actually close out those vulnerabilities could be a way of actually making DeFi protocols more safer and more secure, right? If people know what the vulnerabilities are, they probably wouldn't invest at that point in time. And when we know that the problems have been sorted out is when we would start, using that protocol. Another thing is DeFi insurance. A lot of companies are doing it so far, but I think it can be a little more robust than what it is currently. So in terms of, how we could go in that direction would be, just being more transparent. And I think the organizations need to be more open about the lack of what they have and what they don't. And this is something I would say every company should be doing in the blockchain space, especially with, blockchain technology being all about transparency and for the community, right? So that would be the main thing that I would try to resolve here.
Yeah, some great points, Kaavya. Tarusha, Adrian, would you guys like to share?
So, I would just like to add to what Kaavya and Pranav already kind of said, that self-governance is very important, considering, there is a lack of clarity vis-a-vis any concrete policy. So, self-governance becomes key to scale. The other thing that, there needs to be, there are a lot of, I think, centralized apps that are masquerading as, dApps right now, at least, and that needs to change. Obviously, the thing is that, to give credit where credit is due, I don't think decentralization can happen overnight. It's a process. Like, you start and you move towards making your app decentralized. It cannot be decentralized from day one, right? So that is fact as well. But ultimately, it is the onus of the platforms and the entrepreneurs to be as transparent as possible, try to build in public, because you are really working with cogs of a wheel that are being utilized and can have really long lasting impact. And the ripple effects, like if you're dealing with any kind of it's a financial market, to think that okay, if any sort of a failure is happening there, then the ripple effects are seen in multiple ways. As Pranav mentioned, that right now what is happening, it's a contagion, and we need to sort of observe and see what all does it take down. But again, I think that what is important is self-regulation. I think that entrepreneurs need to be very transparent with what they are doing, even though that can also be a little tricky, because we are as a society, we kind of frown upon any kind of failure, and entrepreneurs take it very personally when they fail, so they don't want to share that in public. But I think that a lot more stakeholders talking about this, giving them encouragement that it is okay that you are failing, or if you are just doing right by your end user, I think then all is well. And I think a lot of entrepreneurs do take that seriously, and they continue to scale. Ultimately, I think another additional thing would be perhaps the security audits that that get done. So that is something that users can be more aware about as well, perhaps, and platforms should be more concerned with getting making sure that their smart contracts are audited, and not just audited once, but audited regularly, to ensure that they are staying ahead of the curve. Because see, nothing is unhackable. That is already a given, but making sure that you have these additional security layers, and you're getting like experts come in and try to get inside your system, I think that is very, very important. I think with Web2 also, companies always did like all of these hackathons and bug bounty hackathons. That the idea was just to allow all of these hackers to get into like the system to see and catch vulnerabilities. And I think that is like a practice that we in the Web3 space, we should sort of adopt as well. It might be expensive in the short term, but the longer term implications I think are greater if we don't do it.
Got it. Adrian, are you seeing entrepreneurs self-regulate after whatever has happened? Is there a more conscious effort to do that now?
I think so. Like I think we see more entrepreneurs being more vocal on social media about Ponzi schemes or things that are perceived to be more scammy. And I think that's good. I mean, that's a way of self-regulation too, at least in DeFi, for example. So I think related to self-regulation is more sharing of best practices, and that's also similar to sharing from learnings from failures, right? But then when it comes to operational hygiene, OPSEC or InfoSec, I think there's a lot of best practices, and a lot of it is like borrowed from Web2, or just like it's not necessarily something special to the Web3 world, right? Like when there's big money losses that we hear about, if it's not a scam, or a technology failure, it's usually like related to human engineering, right? Or phishing, right? These are like techniques which are well known, right? It's like private keys are compromised potentially, right? But how did they get the private key? It's like it's human engineering, right? So we still need to maintain those good practices from previously, and share more and more amongst each other how we apply these to our world.
So just moving on to something that the industry is closely watching is the launch of CBDC by the RBI. What do you think, like what impact will it have on both the traditional banks as well as the crypto sector? Pranav, if you'd like to start.
So definitely it will bring about a lot of efficiency and transparency. And these are two bedrocks of a great democracy. So I'm extremely bullish on something like this. Just to put things into perspective, let's say if you go through mints, typically what happens is that I'm just saying 8 to 10% of the total money transmission, actually is a leakage. I won't call it leakage, but it is basically something that is the inefficiency that gets built in the system. They're like notes, which are like have to be transported, and they're soiled notes which have to be returned, etc., etc. I'm just putting it out, right? And then argument could be that, hey, in any case, we consume digital rupee in any case, right? In terms of credit cards and bank accounts, etc., right? But the point is that the other aspect of it is that the traceability is something which is not there. So how do you improve the effectiveness of your policy transmission? Now, there is a certain lag to it. Now, let's say if you are a country wherein 70 to 80% of the people are dependent upon, let's say, vagaries of nature, let's say agriculture, and there is a very fragile SME sector, for example, and then a large number of industrial houses are dependent upon credit facility for the wafer thin margins that they enjoy because we may not be globally competitive, from an import-export perspective. Then how do you ensure that whatever that, subsidies or financial advantage that you're giving to a specific targeted group of audience, it reaches the audience, it is utilized efficiently, and B, if you want to like roll it back, then you can do this literally at will. So CBDC in that context will make the system a lot more agile, a lot more transparent, and a lot more efficient. So I'm extremely bullish on this.
Got it. Tarusha, what do you think will be the implications of introduction of CBDC to the crypto market or even the traditional banks?
I think Pranav kind of already covered it, that it'll bring in transparency, it'll bring in efficiency. So obviously very bullish towards that. The fact that, again, the main, issue or grouse we have with the system is that it is very opaque, and, stuff happens without everybody being kept in the loop. So I think, with CBDCs, that kind of goes away, and that is like the biggest advantage. But having said that, I think for the crypto space, I really don't know how does it, how would it really impact? Because see, when we are talking about crypto, we're talking about decentralization. And when you're talking about something like a CBDC, which is going to be centralized in nature, so that is it, that pretty much is at very much at odds with what crypto or decentralization or Web3 stands for. So again, it might be easier for the traditional financial system to interact with the Web3 space if that is allowed, with the adoption of CBDCs. But other than that, I'm not entirely sure how would it really have an impact on the very essence of Web3, because this is very, very at odds at what Web3 or decentralization kind of stands for. Because here again, the government would be, controlling the CBDCs. So having said that, I think it might just help and, help in increasing adoption if CBDCs are allowed to interact with the Web3 space, and the on-field ramp sort of that process kind of improves. That would be one great implication, I think, and with that, I do think that more liquidity would move into Web3 if that interaction is allowed. But again, it's too early to say whether that interaction will be allowed at all, or whether the government would not really allow that interaction. And if that interaction is not allowed, then again, these are just two parallel systems that are running, which are very at odds with each other. That there is a lot of power that the government is exercising on one end, and the other end, there are platforms that are being built that are essentially moving towards being completely decentralized.
Right. Kaavya, Adrian, do you have any thoughts on this? If you're seeing a successful application or introduction of CBDC outside of India, and how it's shaped the economy?
So I'm pretty much with Tarusha in terms of like retail users, right? I don't see how CBDCs would affect any sort of cryptocurrency user as of now. But I do see the launch of CBDCs actually adding to more mass adoption, right? People like my parents would be open to actually using digital currencies because it's backed by the government, and there are people who follow rules and regulations. I see companies like, Cred and Google Pay actually implementing the CBDC. Instead of having given out cred scores, they could essentially give out the digital currency to actually use for users. So this would mean that they don't actually take vouchers, but rather have money that they can use for any sort of payment that they can make. So I do see that there'd be mass adoption for CBDCs if they are launched in India, which means that this is one step towards mass adoption of cryptocurrencies itself for everyone in the world, right? Because then people start understanding how decentralized currency works in general. Counterpart for banks, I think, and the users of banks, I think this adds a layer of transparency where we know where the money is being used, the money is being lent, and everything is essentially stored on the blockchain. And this becomes easier in terms of traditional banking systems as well. Everything from getting a loan would be easier than actually having to go through the tedious process that we have currently in the banking system that we have. So overall, very bullish on CBDCs, and I think it's one step closer to mass adoption of the entire decentralized tech.
Adrian, any final thoughts on this before we move on to the final question?
Yeah, a couple of thoughts. So I think the Canadian central bank, looked at this a number of times over the past 5 years. Let's say, I think the first study I saw maybe from the 2017 era, but their conclusion, in short, was that it's maybe too premature to launch a digital Canadian dollar. That doesn't mean that there aren't, but those have been launched by private sector, not by the Canadian bank. So I think that is really my view too, that, I think we might see some experiments by central banks around this, but I think it's maybe like 3 to 5 years away. But, when you think about crypto mass adoption, it may be 3 to 5 years away. So, so I think that's okay.
Right. So, we started the conversation with exploring scalable use cases of blockchain technology. Now, if we can, end it with, if you guys can talk about the kind of projects you're working on or investing in that you're particularly excited about that sort of further enhance the blockchain ecosystem in India or outside. Pranav, if you want to go first, and then others can follow.
So there are two broad areas, I would say. That one is infrastructure. So infrastructure would be your financial infrastructure, especially. Right. I would say payment gateways, custodies, etc. These are very interesting. By the way, I just want to make a point here is that one of the things that my sense is government would definitely benefit from in terms of regulation would be to giving a space for custody solutions. Let's say custody companies to establish themselves as a local entities so that the assets are in local mainland, and that will give them a lot of comfort that, at least various tracking and tracing activities can be done for the assets. Okay, so one is infrastructure. So infrastructure has very broad context in terms of finance, which is payment gateways, etc., custody and exchanges, which I mentioned earlier. The second is, let's say, gaming infrastructure, metaverse infrastructure. These are very interesting amorphous spaces right now, which are becoming a lot more concretized. And gaming, India is the fastest growing gaming market in the world right now. So in that sense, whatever will happen now, play to earn may be going through its own stress. But the thing is, it also projected a very interesting model, which can create a balance between gameplay as well as monetization and transfer of assets which are in game, whether it is Roblox or, whatever, different games. And that is something of, tremendous interest. So how can we invest in infrastructure like this? And the third would be infrastructure, which is, let's say, in terms of even core technology, blockchain space itself. This is a brilliant time where, let's say, all the noise has settled down and price is not the most interesting feature right now. So the most interesting feature is that what builders are doing right now in terms of building some interesting technology pieces, which are eventually going to channelize both data and value over a span of time. So this is on the infrastructure. The second part is middleware. Now, if you look at the entire technology stack, you have blockchains, layer 1s, layer 2s, a lot of hype and a lot of money being there, etc. But over a span of time, our thesis is that this will become a monolith as a multi-chain world emerges. The most exciting space is the middleware. So, for example, it's a Covalent, like Adrian, who's representing Covalent here, is a very interesting middleware, component. And they have indexed, innumerable number. I think I was talking to Ganesh recently, he was mentioning that I think 50 odd blockchains they've indexed. What indexing means is that they have the data sets of 51 blockchains, the real-time data sets, so that interesting applications can be built to analyze, to project this data, to sort of take decisions, etc. So that creates a very interesting, this is agnostic to any blockchain. Similarly, there could be data oracles, like a company like Pan Protocol, etc. And then there could be those which are decentralizing and spinning up nodes. So these are, think of them as like cog in the wheels, which are very important for taking the fundamental base layer blockchain as a technology and making it more closer to the application layer, where the consumer tech and especially the fintech applications around blockchain will actually scale and prosper. So we are right now very bullish on infrastructure layer and the middleware, which is getting a lot more concretized right now.
Kaavya, any projects that you would like to talk about that you're investing in or partnering with to further the application of blockchain?
For sure. So my organization essentially helps in getting more developers into the ecosystem. Blockchain, as it is an engineering movement, there aren't enough engineers in this, in this technology for the betterment of the technology itself, right? Which is why, as Pranav mentioned, infrastructure projects are very interesting to him. But who is building those infrastructure projects? It is engineers. But what we look at predominantly is partnering with education platforms that essentially help more engineers understand this technology and start building in this technology, right? So what I'm very bullish on right now, because we are so nascent, is ecosystem enablers. So essentially companies that are helping help connecting the blocks, the missing blocks of the ecosystem that's already built out so far. So far we have quite a few infrastructure projects, middleware projects, and decentralized applications are immense right now. But I think that we are still pretty nascent in terms of the technology itself. There are, as you mentioned, security vulnerabilities. So how do we get those gaps fixed in the next coming years before we actually go into a place where this technology is in its scaling phase, right? Not in its growth phase. So for me right now, what I'm bullish on is mostly projects that are getting developers interested in this technology, getting new infrastructure projects built, and any sort of middleware project that exists in terms of dev tools, DAO tooling, metaverse tooling, that sort of stuff, right? So those are the kind of projects that I'm pretty excited about as of now.
Awesome. Tarusha, any projects that you...
Kaavya and Pranav kind of stole my answer. So I was about to say infrastructure play and ecosystem enablers. So essentially, yes, my bet would be on them as well. Essentially, these are the guys who are building right now, and their results will show once this kind of correction contagion is over. So yes, my bet would also be on ecosystem enablers, people who are helping, putting those blocks together, helping people move from Web 2 to Web 3, lending a helping hand there, as well as the infrastructure play, because these are kind of plays that you have a moat around, where with these platforms there is a moat inbuilt, and I would bet on that moat to sustain them through this particular cycle and then the next.
Right. Adrian, if you'd like to share any interesting projects that...
Yeah, sure. I mean, not project specifically, but similar to Pranav, Kaavya, and Tarusha, I think there's massive potential around infrastructure, data infrastructure specifically. I think it's very important when we look at mass adoption, we want to bring along as many people as we can where they already have developed and mature knowledge and skill sets, right? So like we say, there's how many JavaScript developers are in the world? How do we make blockchain look like an API which they can manipulate with JavaScript, right? Like, for example, how many people can use an Excel spreadsheet? How do we make blockchain look like an Excel spreadsheet? Mm-hmm. How many people can, are familiar with data warehouses, or maybe something more advanced, but how do we make blockchain look like that? Right, so those are the type of data middleware solutions, for example, which I think are very, very powerful to bring along, all the people, the millions of people who have those skill sets and that training in the past. And so then specifically, I think this is related to what Pranav said, like around games and adoption of blockchain by games. So games, actually, they require very performant blockchains. So, so now there's a trend to like single purpose blockchains, right? So these are spun up by either like Avalanche or Polygon or, other L1s, but, and they're called subnets or superchains or app chains, have different terminology, but there's like single purpose, single ecosystem blockchains. I think there's like very large potential there because it captures all the long tail of like use cases around games and things like that. And so we want to, provide indexing services and make the data of all this long tail also available to the world.
So that's a wrap for ET Future of Money 2022. I would like to thank once again our stellar panelists, Kaavya Prasad, Tarusha Mittal, Pranav Sharma, and Adrian Jonklaas for joining us and sharing their insightful thoughts on everything blockchain and the way ahead. Thank you so much.